Hello and welcome to the Tuesday Midday Market Report. The US equity markets fell about 2.9% overnight after China allowed its currency, the yuan, to fall below 7 per US dollar and suspended purchasing US agricultural products in retaliation to the latest tariff hikes announced by the US last week. Our market off about $80 billion by midday. The S&P ASX 200 tumbled, losing about 2.5% to 6,476 points. Technology stocks were among the hardest hit. It was a sea of red. Xero and WiseTech Global both dropping more than 7.5%. Investors look for safety in gold as that rose 1.8% to US $1,464 an ounce. Northern Star Resources climbed 2% off the back of that, and the big four banks slid between 1.8 and 2.5% ahead of the RBA rate decision later this afternoon. Taking a closer look at the US, and we've heard of market jitters, but we're seeing more and more of market twitters. The latest round of Trump tweets poses the question, how far will these two superpowers go to give the perception that they're on top of these negotiations? China escalated the trade war with the US, sending American stocks to their biggest drop this year and sparking a rally in global bonds. Apple led the decline in stocks that have the most to lose from this new round of tariffs. That lost 5.2%. Nike dropped 2.7%. Macy's and Best Buy pulled back 3.1 and 3.5% respectively. China, it's historically controlled its currency, the yuan. It allowed it to fall to its lowest level against the dollar in more than a decade. Along with the currency move, China retaliated by suspending the purchase of US agricultural products and threatened to slap tariffs on the farm goods purchased after August 3. Investors rushed to traditional safe havens like treasuries and gold amid the uncertainty. The benchmark 10-year treasury yield fell to 1.74% and reached its lowest level since November 2016. A weaker yuan gives Chinese manufacturers a boost by making their products cheaper on the global market. At the same time, that dampens demand for US manufacturers. Now, the risk here is that if buyers feel that prices have further to fall, then they may hold off spending, further reducing economic activity. Not a great result for a US economy that's already experiencing downward pressure on inflation. Investors will look closely to the US markets overnight and they'll see if this is a blip on markets representing a buying opportunity or if it's the start of a stronger trend causing increased weightings to defensive investments. Have a great afternoon.